Lithium Americas stock had a rough session on Friday, closing down by 55 cents or about 6.84% at $7.49 per share. The selling didn't stop there, with the stock giving up another 39 cents in the aftermarket. While that's a disappointing finish to the week, it's important to see it in context. The broader market sold off sharply as renewed trade war rhetoric between the United States and China spooked investors. The conversation around new tariffs and Beijing's tightening grip on rare earth material exports rippled through the global commodities and technology sectors. At first glance, it might seem counterintuitive that Lithium Americas would fall on this kind of news. After all, if trade tensions escalate and China restricts exports of rare earth and critical materials, companies like Lithium Americas should stand to benefit. The whole point of the Thacker Pass project is to develop a reliable domestic supply of lithium, one of the key materials for electric vehicle batteries and energy storage systems. So why did the stock fall instead of rallying? The answer has less to do with fundamentals and more to do with short-term psychology, liquidity, and macro fear. Whenever global markets are rattled by geopolitical headlines, especially ones involving China, traders rush to reduce exposure to anything perceived as risky or cyclical. Lithium, though strategically important, still trades like a high-beta commodity. Investors often lump lithium stocks together with other resource or EV-related names, selling them in moments of panic even if they might ultimately benefit from the news. This is exactly what we saw on Friday. The market was not distinguishing between near-term volatility and long-term opportunity. It was a broad de-risking move that caught everything in its path. The irony is that over the medium term, a renewed trade war could be a major catalyst for Lithium Americas. Let's break down why. China currently dominates the processing and export of rare earth elements and a significant portion of global lithium refining. If tensions escalate, the United States and its allies will accelerate efforts to secure independent supply chains for critical minerals. That means more government support, more policy incentives, and potentially faster project approvals for companies operating domestically. Thacker Pass, being one of the largest known lithium deposits in North America, is perfectly positioned to benefit from that shift. We've already seen what the US government is willing to do to secure domestic production. Just a few weeks ago, the Department of Energy confirmed a 5% equity stake in Lithium Americas, alongside a $2.26 billion loan to finance the construction of Thacker Pass. That kind of direct federal participation is unprecedented in the lithium sector. It demonstrates that Washington views this project as a strategic asset. In a world where supply chains are being weaponized, that designation matters. It means Lithium Americas is not just a private company, it's part of the national strategy for energy independence. So even though the stock fell this week, the underlying thesis has arguably strengthened. If trade tensions with China intensify, the US government's commitment to domestic lithium becomes even more critical. That could translate into additional policy support, tax incentives, or even more favorable terms for projects already backed by the Department of Energy. In that sense, short-term volatility could be setting the stage for long-term appreciation. Now let's talk about the other factors that might be contributing to this pullback. After the explosive rally we saw in late September and early October, where LAC climbed more than 50% in just a few sessions, some profit-taking was inevitable. Momentum traders who bought into the rally have likely started to unwind their positions, locking in gains after the initial euphoria faded. That's normal market behavior. Every large upward move is followed by a period of consolidation and cooling off. There's also an element of uncertainty surrounding the company's recently announced $250 million at-the-market equity program. This program gives Lithium Americas the ability to issue new shares gradually over time to raise capital as needed. While this is a common funding mechanism for companies in the development phase, it does introduce concerns about dilution. Some investors might be selling preemptively, worried that additional shares could weigh on earnings per share in the future. However, it's worth remembering why the company put this structure in place. Building a project like Thacker Pass is enormously capital-intensive. Even with the Department of Energy loan in hand, there are still working capital needs, equipment costs, and operational expenses to cover. By setting up an ATM program, management gains flexibility to raise small amounts of capital at favorable prices without having to execute a large, one-time offering that could flood the market. It's actually a prudent move that strengthens liquidity and reduces financial risk over time. The real focus for investors should now be on execution. The company is entering a phase where financing is largely secured, and the emphasis shifts toward construction, permitting milestones, and operational readiness. Every step forward in that process reduces risk and increases the project's intrinsic value. Investors should expect more updates in the coming months on site preparation, equipment procurement, and workforce expansion at Thacker Pass. Those tangible milestones will matter far more to long-term valuation than day-to-day stock swings. From a technical standpoint, the stock's recent decline has brought it back to an area of potential support. The $7.50 level corresponds to a previous consolidation zone from early September. If the stock can hold near this range and stabilize next week, that could form the base for the next upward move. Resistance remains near $8.50, while the $10 level continues to serve as a major psychological ceiling. Given how far the stock ran in its previous rally, a few weeks of consolidation between $7.50 and $8.50 would actually be healthy. Looking beyond the technicals, the fundamental story remains compelling. Lithium Americas is not just another mining company, it is now a strategic partner of both the US government and General Motors. That trifecta of public-private alignment creates a unique moat. It gives the company credibility, access to low-cost capital, and a clear customer pipeline for its production. In an environment where global supply chains are fracturing and governments are prioritizing self-sufficiency, those relationships could become even more valuable. Investors should also consider the macro dynamics at play in the lithium market. Prices for lithium carbonate and hydroxide have stabilized after a steep correction earlier this year. Many analysts believe the market is approaching a new equilibrium as supply growth slows and demand from the EV sector continues to rise. Automakers are ramping up electric vehicle production, and the energy storage industry is expanding rapidly. Both trends point towards sustained demand for lithium over the next decade. That demand, combined with domestic policy incentives, sets a favorable long-term backdrop for LAC. So how should investors interpret this week's price action? In my view, it's a temporary setback within an ongoing transformation. The sell-off reflects market anxiety, not a fundamental change in the company's outlook. The narrative is still intact. Lithium Americas has the financing, partnerships, and government support it needs to become a cornerstone of the US critical minerals strategy. The trade war headlines might have scared the market, but they actually reinforce the strategic importance of what LAC is building. Looking ahead, there are a few key catalysts to watch. First, any additional commentary from Washington or Beijing on trade policy could impact sentiment across the sector. If China moves to further tighten exports of critical materials, that could prompt the US to double down on domestic initiatives, a clear positive for LAC. Second, watch for updates on the company's SEC filings, which will provide details on the Department of Energy's warrants and the structure of the ATM program. Clarity on those fronts should help reduce uncertainty and rebuild investor confidence. Third, keep an eye on lithium prices and EV adoption trends, as both will shape broader sector sentiment. In terms of positioning, this current weakness could present an opportunity for long-term investors. The stock is now trading well below its recent highs, and the underlying story has not changed. If anything, it's improved with each new piece of government involvement. For investors who believe in the electrification trend and the reshoring of US supply chains, these kind of pullbacks are often the moments that set up the next move higher. To put it simply, the near-term volatility is noise. The structural tailwinds are real. The transition to electric mobility and renewable energy storage is not slowing down, and the United States is determined to secure its own supply of critical materials. Lithium Americas sits right at the intersection of those trends, with both policy and industry support. That's a powerful position to be in, even if the market takes a few day tours along the way. In summary, Lithium Americas closed Friday at $7.49, down 55 cents or nearly 7%, with additional aftermarket weakness bringing the price lower. The drop was largely driven by macro fear surrounding renewed trade tensions with China and short-term profit-taking after a strong rally. While that pressure is real, the broader picture remains bright. A trade war that focuses on rare earth materials only strengthens the case for domestic lithium production, and LAC is one of the few companies ready to meet that demand. The company's financial foundation is solid, supported by the Department of Energy's $2.26 billion loan and 5% equity stake, as well as its partnership with General Motors. The new at-the-market equity program provides additional flexibility for growth, and the Thacker Pass project continues to advance as a cornerstone of US energy independence. This isn't the end of the story. It's a pause in the middle of a longer transformation. Volatility comes with the territory, but the direction of travel remains upward. Lithium Americas is building something that extends beyond a single stock. It's helping to build the infrastructure for America's next industrial era. The market may be nervous today, but over the long term, that nervousness could turn into conviction.